if you're looking for some trade setups going into December, you're not going to want to miss this. Take a look at what we got here. On the left, the farmost left, we have the ticker symbols. So these are for different stocks. And what I've done is I've ranked these from not just the gain frequency for December. For example, SID right here, on average, goes up 68% specifically in December. Well, that's great. And PDCE only 52. GNTX 67% of the time it's bullish or goes up, goes higher in the month of December. Now that alone is pretty good, right? However, you always need to match it up with how much does it go up or down by? Because in this case, SID, it going up 68% of the time, on the surface that may seem really great, but how much does it go up by? Well, in this case, over 7%, which is absolutely outstanding. That's incredible. In fact, if you compare it over here to the average, it only goes up 51, almost 52% of the time. So it goes up, the gain frequency is significantly more than the average, and the expected move, 7% in this case, is also significantly more than its average of 2% or 1.9. So when we look at these outliers or these statistical anomalies to trade, this really stacks the odds on our side and gives us a very significant advantage in trading. Now we can go down the list and you can see it goes from highest to lowest all the way down. Here's the worst, SBR. It's bullish only 24% of the time. And it goes down on average a negative 5%. So that's its expected move is 5%, give or take. All right. And you can see the averages here as well and all that type of stuff. So let's go back to the bullish ones. Now I can rank this by the gain frequency. If I just want to stack the frequency on my side, the probability of frequency on my side, that's ESE and SYK. Those two go up in December on average 80% of the time. Again, that's really incredible, where the averages are only around 56%. But again, what does it go up by? Like, how much does it go up? If it only goes up like 2 basis points, who cares? What's the point in that? But when we look at the expected move, 4.5%, well, now we're getting somewhere, aren't we? So not only does it go up 80% of the time, that alone is a nice statistical advantage, but it goes up 4.5%. So that's the expected move in December is 4.5% compared to the average of only 1.12%. So that's one of those statistical anomalies that we're looking for. Okay. So let me go back to the December expected move. I actually like to rank it by expectancy, not by the gain frequency, because with expectancy, you're really getting to the heart of the supply and demand of the move that it has. These are seasonal moves. And for whatever reason, there's various reasons of why the demand might be higher in this particular stock to cause it to go higher or lower, in some cases the bearish ones. And so, for example, if we take, let's just look at CNMD as an example. It goes up 76% on average in the month of December compared to only 55% on average, okay, throughout the 12 full months. And it goes up just basically 5% is the expected move here, whereas the average is less than 1%. So we have a real statistical anomaly here. There's some serious seasonality, some kind of seasonal move that is fueling this particular stock to go higher, not only the majority of the time, but to go higher 5 times more than the normal. So that gets my attention, and I would put that on my radar to watch. So let's actually go to the charts, and we can see on the upper left we have a monthly chart, then we have the weekly chart on the lower left, and then we have the daily. So this is ConMed Corporation. Now, I don't really know much at all about this company other than it has a real statistical anomaly, specifically in the month of December. And that alone is enough information for me to go look for some possible trading opportunities on this. Now, we're not in December yet. We're late, November 19th at the time of this recording. And we could see just real basic technical analysis here, just real high level type stuff, we can see price has, come down quite a bit in the past several months, and it's hanging out in this area here. Let me color off this area here. It's really been going sideways in this little area right here. Let's give that, we'll go grayish on that one. There we are. So for the past several months, it's really just gone flat, gone sideways. Now, if you kind of compare from this extreme low to that extreme low, you're like, yeah, you're kind of on the lower end there. Sure, that's nice. Some people look at that as a better value and all that kind of stuff. When it comes to value, there's a lot of different ways to describe value of a publicly traded company. We won't get into that right now. But here's what I do see that's encouraging from a bullish perspective, okay? So I'm going to mark off these most recent lows down here. So we have that green line there, and I'll just mark off this right here, okay? So we have price that has been trading in this range, call it $60 to $80 range, basically, okay? So it's trading between a low of the $60 area to the high of the $80 area, and it's really been stuck in that range. Now, looking back at these stats right here, these numbers, where we can look at the gain frequency and the expectancy, and basically say, okay, 76% of the time it's bullish in December, and it's up, or the expected move is basically 5%. So now I go and look at this and say, okay, so that means next month it should, statistically speaking, and if that holds out historically, it should do something like that. Okay, so that is what would be the expected move according to what it's done historically based on those patterns. And obviously, we would expect that to continue unless there's some big catalyst that says, no, it's not going to do it this year. And that's where further investigation would be needed to find out, okay, what does this company actually do? I don't know. It has med in the name. Maybe there's something with medical. I don't know. Okay, but that's something we would have to investigate to see, is there some reason why this very bullish outlier may not happen this year? Maybe there's some catalyst that happen that will make it not happen. So we would need to know that. But aside from that, let's just focus on the technical parts of it here. And this is what we would be looking for. Now, here's what's also really interesting on this. This is actually one of my favorite patterns that's setting up right now. Let me explain why. Number one, the weekly chart came from a downtrend. So here's that downtrend right over here. We'll do that red. Okay, so there's your downtrend. Now it's going recently here, currently I should say, going sideways. So we'll color that in like that. So that's all your sideways movement. And this is actually encouraging, number one, because it's not going down anymore. Number two, that sideways action right there, it's telling you, well, the bears are no longer in control, and neither are the bulls for that matter, but at least we know that it's not going down, with the expectation that price will continue to go higher in December based on what I just showed you. So that is quite encouraging. The other thing that's encouraging is this sideways weekly chart action, this pattern, is happening over here, look on the left, in a demand area or buy zone, support area on the monthly chart. That's what we call confluence. Write this down. Confluence is one of the most important technical analysis factors that you'll ever use. Confluence, confluence, confluence. Remember that. Never forget that. Write that down, big bold letters, underline it, circle it, highlight it, okay? Confluence is critical. Just remember that part. Confluence is critical. So we have confluence. What I mean by that is that we have one technical pattern, weekly chart, matching up with another technical pattern, monthly chart. Both of them are bullish, as well as this historical seasonality is also bullish. Not technical analysis, but it's its own separate analysis. And now we've basically matched up the historical data with technical data to help assist in our decision. All right, now let's move to the weekly chart, the daily chart. Now on the daily chart, we can see here's the current price. It looks like about 72.50-ish, okay? Now on this little guy, let's go by zone. There we are. It is just now coming out of a buy zone. Not a bad spot to buy, okay? It's just now coming out of a buy zone. So if you're looking for a buy setup, you got one right now. Now, I don't know if this is optionable or not. Probably not, because I'm looking at the average daily volume up here. That's fairly low. So, you just not even a million. Okay, so not likely optionable. If it is, it's not probably liquid enough to trade options on. But if it was, or you see another setup that is optionable, great. You got a good looking setup here, okay, to do a bullish position on. However, something like this, I would look at this and say, hey, I've got the statistics on my side. It's very bullish from a frequency standpoint. 76% of the time, price goes higher in December, and it has a expected move of 5%. That's pretty incredible. So I add those together with the technicals that we see here. This is a no-brainer for me. I'm looking for a spot to buy, and obviously this would be one. Now, it is just a hairline above that buy zone. I'm not getting picky about this. I'd feel perfectly fine buying this thing. So, for example, let's just say we're buying at current price here. Okay, oops, let me flip that. Say, for example, if we buy right now at current price, okay, the stop would be the red line. My first target, which is very conservative, which is simply a 1-to-1 reward-risk ratio at 76.52. In other words, price just has to go to 76.52 for me to be in a position where I could very easily break even on this thing, okay, from a risk mitigation perspective. And guess what percent that is? 5 1/3. Isn't that the expected move? Yep. However, that's December, and we're early. And so something like this is like, yeah, I want to look at these early. I don't want to be December 1st and say, what's coming out this month? You're too late. Okay, you want to look a week or two in advance, maybe even a month in advance, to start planning these ahead of time, which is exactly what we're doing right now. So anyways, here you are. This would be one particular example. And how I like to do these things is, let's say I'm buying right now, for example, and then I would sell half of my position here at 76.52. And as soon as I sell half at a 1-to-1 reward-risk ratio, I literally have a free trade, a risk-free trade. What I mean by that is, let's say price does go up, hits that 76.52, I sell half the position, and then if it goes all the way back down, what happens? I break even on that trade. Because I've already sold half for a profit, so that means there's half of my original position left, and if I get stopped out, then that would be a break-even trade. Now, realistically, by the time price does hit this area up here, I'm moving my stop up somewhere, depending on the pattern that forms and my rules. I'd move my stop up somewhere above my initial stop location, okay? That's getting a little far deep in the weeds here, but anyways, there you are. So hopefully this helps you get an idea of how to look at these, how to use these. And by the way, go ahead and take a screenshot of this if you want. And you can look at these other stocks, go ahead and screen them, scan them, do your due diligence on them, okay? And then let me scroll down. You can screenshot the next batch. There you go, okay? So this is specifically for the month of December. Got plenty to choose from. Let me give you some bearish ones too while we're at it. There you go. Those are the worst of the worst for December. Not many of them, by the way, because December's historically a bullish month. So be very cautious about shorting in December. You better have a very good reason to sell short, very good catalyst to sell short, okay? So focus on the bullish ones. Especially if you're in a bullish market environment, you should be focusing on bullish setups anyway. Okay. By the way, I don't know if you know this or not, but there's a humongous sale going on, 70% off my 5-star rated masterclass. Yep, going out of business, folks. It's been a fun one. It's been a good journey, but doors are closing December 31st. So this is literally your last chance to ever get a deal like this. There will not be another chance. This is it. Once the doors are closed, done. I'll throw a link in if you want more details on it, to learn more about what is actually in the masterclass and what's included and all that kind of stuff. I'll put a link right below or above this video here, and you can check it out. All right, everyone. Hey, hopefully that was helpful for you. God bless and good trading.